Good afternoon, everyone, and thank you, Benjamin, and thanks, ABG, for hosting us here today. I am gonna go through a short profile presentation on the company, and then we will have some room for Q&A. All right, if we can go to the first slide, please. ssur is, I would say, a mid-sized global medical device company operating in two sub-segments of the broader orthopedics market, more specifically in bracing and supports and prosthetics. We operate or have direct operations in 36 countries today and around 4,000 full-time employees working in mainly in the, I would say, the more mature healthcare markets of the world, and I'll get back to that point a little later. ssur is an innovation-driven business. We invest around roughly $30 million in R&D every year, and we have around 2,000 patents with regards to how technology is used to increase mobility, mostly for individuals that have a chronic mobility challenge. The company has always been profitable and always had good growth since ssur was listed on the stock exchange in 1999. Since listing, the company has grown on average 17% per year, which has been a healthy combination of organic and external growth. ssur is listed in Copenhagen, and our majority shareholder is the Demand Invest Foundation. Now, if you go to the next slide, please. Here we have a snapshot of the two product segments that we play in, prosthetics and bracing and support. ssur, starting with prosthetics, ssur, this is our legacy business. This is where we originate from. The companies established around the prosthetic side, and ssur, we manufacture everything or all the components that are needed to build a prosthetic leg. And we look at our business as from a product standpoint, it's both mechanical products and what we refer to as bionics. Bionics are products that have some sort of sensoring capability or algorithms or artificial intelligence that help the user move more, let's call it freely or more normally. And this is roughly 20% of our product sales in prosthetics today, the bionics part, while mechanical products, that's where most of the volume is for ssur, and this is for the market in general. But what we've seen over the last years is gradually, at least in the more where you have well-developed healthcare system, this gradually you have a gradual increased penetration of amputees having access to bionics. On the bracing and support side, 37% of our sales in 2022, a fairly broad product range for a fairly broad set of indications. But the main principle here is we have products that are used for a short time for treating some sort of injury or some sort of rehabilitation phase after an injury or after a knee replacement surgery or some other traumatic events that have impacted ligaments or muscles, so that need some sort of recovery or rehabilitation period. It's worth mentioning also that most of the products that we sell and are utilized again in mature healthcare markets are ultimately paid for by some sort of reimbursement system, either public or private. It's also important to note that where we are seeing the biggest volume growth in our business today, which is in private pay markets, outside of reimbursement, that's around 10% of our ultimate sales today are in these markets. And that's if you go to the next slide, please. Here you have our geographic footprint. Our sales are very much concentrated around Americas, Canada, UK, France, Benelux, Germany, Scandinavian countries. This is where we have the best established processes and best access to good prosthetic care globally, while we are increasingly building a presence in other markets where healthcare systems are developing, but also participating in the private pay market. ssur is headquartered here in Iceland. Here we have R&D for prosthetics, some manufacturing. We also manufacture in Mexico and in China. And as previously stated, the center of gravity is in these mature, well-developed healthcare systems. And one more slide on just the structural aspects around the market. If you go to the next slide, please. Here you have an overview of the prosthetics market and bracing market. Prosthetics market is a $1.4 billion market, reasonably consolidated. You have Otto Bock as the largest player in this market, and ssur second with 23 to 24% market share. Here we go to market through orthopedic and prosthetic clinics. And what drives growth in prosthetics in its most simple form is that in the more developed markets you have gradually more access to higher quality bionics or higher quality prosthesis, so more like a mixed growth. The average or the number of amputees is maybe growing low single digit, while in many on the emerging market side is more volume-driven growth in private pay markets. On the bracing and support side, it's a bigger market. It is more fragmented here. ssur is among a group of companies that is second in size to Enovis, which is the biggest player in the market with about 20% share. And here it's more volume-driven growth, and it's these traditional healthcare growth drivers, an aging population, more active population, more healthcare consumerism that drives volume growth for bracing and support products. Route to market, again, orthopedic and prosthetic clinics, but also hospital and orthopedic clinics and orthopedic surgery centers. Now that completes, let's say, the descriptive part in terms of where we compete, the underlying growth dynamics, and the competitive or industry structure, if we will, in these two product segments. If you go to the next slide, please, and here we have some of our key themes when it comes to how we talk about our priorities when it comes to growing the business. And if you go to the next slide, please. This is a pretty fundamental picture in terms of how to think about the growth in prosthetics. Now, most of our business every year, most of the products that we sell every year are used to maintain existing legs. There's an amputee population out there that consistently needs to maintain, upgrade, and renew their mobility solution. And what has driven value growth in the prosthetics market over the last decades is that gradually more amputees are having access to better and higher quality products, thereby obtaining a functional upgrade in their mobility levels. And you see here some examples of on the upper right corner, you have the more advanced products. Advanced meaning some sensoring capability, some capability to help the user move more freely. And this is a fundamental aspect of our business. We're in the business of innovating and creating technology that is efficient, obviously, for those that need these products, but also for those that need to pay for these products. So even though higher quality prosthesis, all else equal, are more expensive than simpler solutions, they are still efficient for the systems that ultimately pay for these solutions, because all else equal, you will have an individual that is less likely to have other problems in their body. They're less likely to be more mobile. They're less likely to fall, which leads to injuries, which can lead to hospitalization and time away from work, etc. So these health economics, this is ultimately what it's all about. Again, we need to convince payers that this is the case, and and payers approach this topic in a very different way, country by country, market by market. But this is, in essence, the job in prosthetics is to grow the utilization of higher quality mobility devices that always equal increase the quality of life for those that need these products. When it comes to other growth themes, if you can go to the next slide, please. Geographic expansion is a major topic for us. Most of our businesses, as I mentioned earlier, generated in the more mature global markets, but there's a growing awareness, let's say, and a growing ability to invest in good solutions in markets which have perhaps a less developed healthcare system, and this is where we have seen the biggest or the highest relative growth rates in our business in the last decade. That is in these new markets, and we focused on China in recent years, Brazil, Southeast Asia, other markets that are really building infrastructure and increased ability to access good prosthetic solutions. Another key theme in the industry is what we refer to as expanding in the value chain. ssur has done that also through acquiring and owning companies that are servicing the people that need our products, and also providing solutions for our O&P clinical customers that help them around and streamline the process around customizing what needs to be customized for each and every individual. So there are opportunities for manufacturers or companies that are historically manufacturers of components to stretch into other revenue streams and take a bigger part of the overall value chain in the mobility industry. And then finally, acquisitions have always been a part of our history. We have been, or we've looked for acquisition opportunities that strengthen our ability to execute on our strategy. A good example of that was the acquisition of Naked Prosthetics that we completed a few months ago, which is a company that manufactures fingers for partial hand amputees, and then strengthens our ability to serve that patient group or that population group, let's say, better. So we'll continue to monitor acquisition opportunities, both again with regards to taking a bigger part of the overall value chain and also from a technology product standpoint and market access standpoint. If you go to the next slide, please. Here we have a little bit around financials. The business has, let's say pre-COVID, grown consistently around 5 to 6% organic with a few extra or with some added growth on top from acquisitions. Business declined, and the only year we've not grown historically is the year 2020 with COVID, but have rebounded reasonably well in 21 and have grown in all regions and markets here in 22, although that was a bit impacted by these macro challenges like the war in Ukraine and some supply chain complications. Margins reasonably stable, growing, marginal expansion year over year when we adjust for, there's a lot of things blurring this picture, currency, acquisitions, but the underlying margin improvement in the core business has been rather stable. Go to the next slide, please. Yes, a little bit of historical overview around cash generation, free cash flow, always consistently strong, again with a little bit of exception last year due to the supply chain complications. We tried to, or our objective is to maintain net debt to EBITDA 2 to 3 times, and have been returning capital to our shareholders through mostly share buybacks. Next slide, please. Our sustainability commitment is we've always had an ambitious plan around being a responsible citizen and being and have had an ambitious plan around the factors that we can influence on the sustainability side. Our biggest contribution is to overall health and well-being. That's where we influence the biggest, or have the biggest influence, helping people have more active and more healthy lives. And but we've also had an ambitious plan around other factors that are under our influence. I think I'm sort of I think for time's sake, if we are to have a few minutes for questions, I think I'll pause there, Benjamin.
Thank you very much, Sven, and thank you for the thorough presentation. And my sincere apologies for the technical issue at the beginning of the presentation.
No worries.
I thought I was over that after 2 years of using Teams during lockdown, but there's still some fine tuning apparently. So to jump into the Q&A part of this presentation, Sven, could you just remind us, how does your sales split look in terms of new customers and recurring customers? And also, when I ask that question, it's in regards to your focus on new geographical markets. So obviously, when you enter these markets, you are gaining new customers. So just to get an idea of the cost of acquiring a new patient in these markets, is that higher or lower than in the markets where you're already at?
Yeah, that's a great question. We generally estimate that around 80% of our product sales in prosthetics are used to maintain existing legs, let's say, and that is, and it's a good reminder that I mean, an amputee will always need to maintain their prosthetic leg, and they will renew. And the reimbursement cycle differs between countries, but you need to upgrade, and you will want to upgrade, and you will want to search for what are the right options for you, and you will need to, and some parts of the leg need to be changed and maintained a couple of times per year. So this, that, and every new patient will have a lifespan, and these individuals will need to, over that whole lifespan, maintain their leg, and this is so it is very much like a maintenance business, recurring business to a very large extent, and that's where we are. And again, there's just to simplify between developed and less developed markets. On the developed market side, our focus is to influence reimbursement systems to get gradually more of the amputee population to have better access to better prosthetic solutions. Now, on the less developed market side, there are underlying trends in terms of just higher purchasing power, increased healthcare consumerism, if you will, and also just greater awareness in terms of what is available in terms of technology. And in private pay markets, we are increasingly opening channels through digital marketing and direct activities towards the end users, which we typically don't do in more developed markets, to drive awareness and drive demand. So I don't have a number in terms of let's say, what does it cost us to acquire new patients, but the cost is it's just a different model, and people where you need to pay yourself, that drives different behavior around what people decide to do, and that dynamic is fascinating and changing the landscape around healthcare dramatically in some of these new markets. Let's use that word.
Thank you, Sven. Looking at the organic growth, have you been able to achieve any leverage in the margins from growing your top line? How should we really think about that for the next foreseeable future?
Yes, if we look pre-COVID, and the reason I say that is that there's been so much turbulence and sort of extraordinary factors here over the last couple of years, is we've generally said that our prosthetics business, all else equals, grows faster than our bracing business, and the gross profit margins are all else equal higher on that side. We have, in a normal year, been able to achieve some unit cost productivity, maintaining stable unit cost. So the combination of all of this drives some positive development on the gross profit margin side, and then we've seen mainly some scalability on the G&A side, and this has translated into sort of gradual margin improvement. So it's more in some years, less in other years, but we have scalability on the sales and marketing side as well, but we've reinvested all of that and even a little bit more in building a presence in new markets. And we'll say a little bit about that at our Capital Markets Day end of the month, where this was a big theme for us in the last Capital Markets Day, our emerging market strategy. And we've, in terms of just building presence in more markets, we're largely on track with that.
And that leads me to the final question, Sven. So the Capital Markets Day on the 30th of March, what should we be expecting or looking out for in terms of the pending CMD? And looking back at the previous CMD, how accomplished do you think that has been? Obviously, you didn't know COVID was going to be in the middle part, but yeah.
No, I mean, that's a good question, Benjamin, and I'll start with that. I think looking back at the last couple of markets, I mean, yes, there have been these macroeconomic factors that have impacted everyone. I think, as always, some things have gone well and even better than what we thought, while some things have been slower. But overall, in terms of reach, geographic reach, and on the technology and product side, and also just business mix is different. Our bracing business is smaller. We've done more acquisitions in let's say in moving further at the front end of the value chain. So there's a few themes there which will outline on the Capital Markets Day. But in answering what we will be talking about, I'll try and put it into historical perspective. ssur is a 50-year-old company, and the first 20 years was a lot about sort of creating a product, and from then on it was about building a broader product portfolio and a geographic presence as a wholesaler of medical devices. But now the company is perhaps in the middle of the river, in the third maturity stage, which is also about servicing the people that need our products and opening up a bigger playing field by looking at mobility in a slightly broader sense. So that's what we're going to talk about at our Capital Markets Day, where we are in that transition from being a very much you could say a product company to how we think about the business going forward as a more patient-centric business that is serving individuals that have a chronic mobility challenge.
Thank you very much, Sven. Due to the time, we will conclude the call here. But again, thank you so much for participating here today. And thank you so much to everybody who called in as well to listen to the presentation. I hope you all have a great day.
Thanks for having me. See you later. Cheers. Bye.
See you. Bye.